ANZ has been given the green light to take over Suncorp Bank for a staggering $4.9 billion, despite concerns by the watchdog it would stifle competition. Chief Economist at Macro Business, Leith Van Onselen, joins me now. Leith, appreciate your time today. Now, the ANZ Chief Executive says the deal will provide customers with greater choice. What's your take on that?
Look, I couldn't disagree anymore. So this deal is going to reduce competition in what is already one of the most concentrated banking markets in the world. This is why the ACCC initially blocked the takeover last year, which was erroneously overturned by the Competition Appeals Tribunal. Now, to the extent that this deal reduces competition, increases market power, everybody's going to potentially pay higher fees and higher interest rates. And the decision comes at the same time as corporate profiteering has been blamed at least in part, on Australia's inflation crisis. So this deal has enhanced market power in the banking sector, and it's going to increase opportunities for corporate profiteering and price gouging. And I don't see how that is in the national interest.
OK, you brought up an important point there. Why would the Treasurer sign off on this deal if the ACCC, as you just said, initially blocked it?
Yeah, it's a very good question. It's one that probably needs to go to the Treasurer. Look, as I said, Australia has one of the most concentrated banking sectors in the world. The ACCC, which has a budget of 30 million people, hundreds of staff, conducted a very thorough investigation of this deal, and they blocked it on anti-competitive grounds. And yet, for some reason, a body of 12 people, which is the Australian Competition Appeals Tribunal, overturned the decision, and now the Treasurer has approved it, and it makes no sense. It's going to reduce competition in the banking sector, and it's going to give greater market power to the big four banks, and I can't see how that is in the national interest.
I think many people are concerned about what kind of precedent this sets going forward.
Yeah, absolutely. So basically the ACCC's authority has been undermined here. And what this deal has done is it's going to be red rag to a bull to any private enterprise, a large company that wants to do a takeover or a merger, that anytime the ACCC blocks their deal, they're going to rush straight to the Australian Competition Appeals Tribunal and they're going to try and get it overturned. So this is bad for competition. It's also bad for due process. And it is a black eye on competition policy in Australia.
As expected, there are strict conditions on the merger. They include guaranteed access to vital services, no branch closures in our regions and no job losses. Do you think that stacks up?
Yeah, look, it's better than nothing, but I would have thought that more competition in the banking sector is better than less competition. And this deal is going to give us less competition, which is just not in the national interest. And it's also undermined the ACCC and it's reduced their authority going forward. So it's a bad deal all around.
Thank you very much, Leith Van Onselen, and thank you very much for your time today.
Thanks, Rebecca.